Welcome back to Capital Ideas, where we celebrate the ideas that enrich our lives and the capital markets that turn those ideas into reality. I'm Nick Morgan, co-host of Capital Ideas and co-founder of ICANN, Investor Choice Advocates Network.
I'm Mark Hiraide, Senior Legal Director and Policy Counsel at ICANN.
And I'm Sarah Albright, co-host of Capital Ideas and a very proud board member of ICANN. And today we're joined by Eric Peterson, Kraken's new policy lead, who is the Senior Manager of Policy and Government Relations at Kraken. Eric previously served as policy director at the Satoshi Action Fund, where he worked on state-level digital asset legislation and helped shape some of the most widely discussed policy frameworks in the space. Now he's bringing that experience to Kraken at a pivotal moment for the entire crypto industry, really, as it matures and pushes towards regulatory clarity. And today, Eric joins us to discuss the current state of the crypto markets, as well as the shifting policy landscape. So thank you so much for joining us today, Eric.
Thank you for having me. I've been looking forward to coming on for quite some time.
So first, congrats on the new move to Kraken. Very excited about that. And maybe you could start by, let's start by talking about some of the recent volatility that we've been seeing in the space. Maybe you want to weigh in on that first, especially with what are your thoughts on how institutions in particular are viewing, the markets right now?
Yeah, it's sort of funny when it comes to volatility in the markets. The larger the numbers get around, digital asset market caps, the larger the gains and losses are. Yet it sort of doesn't shake anyone, right? We hit a high of over 120,000 and got close to 80,000. That looked, on a pure number perspective, very close to the, right about 70,000 to under 20,000. But we saw none of the same sort of, I would say, institutional volatility, that being issues like FTX or Three Arrows Capital or Celsius or any of those exchanges going down where people are losing funds. None of that sort of happened. Some traders who might have been playing with leverage might have lost or gained big depending on what side of the trade that they were on. But I think for all of the talk about the volatility in the market, when it comes to the institutions that are allowing the price discovery to happen on a day-to-day basis, that's really been not that much of a story. And I think that just goes to show how much the market continues to mature over the period of time, how strong the liquidity is in the market over this period of time, that you've seen some news stories about, the price going from a high to something relatively lower, but, no stories of anyone, not being able to take out their Bitcoin or stable coins or anything of that nature, which was very not the case just a few years ago.
One of the things we're focused on here at ICANN is this kind of debate right now about preemption. To what extent should state laws be preempted, if at all, by federal market regulation law? Going way back to the mid-90s, we have a little bit of precedent in the National Securities Markets Improvement Act, or NSMIA, which preempted a number of securities, including Reg D, securities offered under Reg D Rule 506. And I think, no doubt, that led to a lot of formation of capital in the private markets. But NSMIA did not completely preempt state blue sky law. For example, the SEC in Rule 504 provided for an exemption that would allow a company to comply with state law, with the thought being that the states might be more innovative or be able to be more nimble in creating regulations that might allow for innovation. And the very same argument is made now, that states are now adopting and have adopted regulatory regimes that would help to encourage the industry. What are your thoughts about whether we should just simply preempt state law and have one uniform law, or allow states to be an incubator, so to speak?
Yeah, I think one of the most profound things that I've heard about the crypto or digital asset market, in that in a lot of ways is just speed running traditional finance markets, things that took 50, 60 years to come through for the traditional finance, whether it's the regulatory apparatuses or adoption or anything of that nature. It's just happened at a much, much faster scale. And so when you started to see securities traded, over 100 years ago, why did you see the first blue sky laws? And they were for investor protection, right? People would spin up fake companies and say they were going to do something and then take your money and hand you a worthless piece of paper and then skip to the next town, and they wouldn't be able to find you. And that this was an attempt to get over that before you started to see federal agencies really borrow from what states had done on traditional securities regulation, and then eventually forming a federal standard that we're all familiar with today. I think the crypto industry has done something very similar. New York was one of the first to get in with the bit license, and other states have taken other tracks and other issues that they have wanted to work on, whether that is Wyoming or California or Illinois or my state of Louisiana, which has a virtual business license. And I think as a market structure legislation comes together, that being like a federal standard for what is the Securities and Exchange Commission going to oversee, what the Commodity Futures Trading Commission is going to oversee, how we're qualifying, digital assets. Are they security? Are they commodity? Are they something else? They've borrowed from the states just in the way that securities regulation borrowed from the states, again, close to 100 years ago, and that's coming through. So I think those have been good lessons to have learned, and it's good that the states have been at the forefront. But when it comes down to something that is, borderless and instant, like cryptocurrency, having necessarily different bespoke state regimes is certainly going to be a problem. If you look over at Europe, for example, they've got their MiCA standard. You can go get regulated by a country, right? That meets under that, and then sort of have access to the European market. I think a similar path for the United States is probably coming, and something that the industry has been asking for a while, both for compliance perspective, but I think also for consumer protection.
Yeah, to your point about borderless transactions, I mean, it's kind of interesting if we think about where we were technologically when NISMIA was enacted. I think people were still on dial-up modems. So it's a very different environment today.
Well, whether it's a state regulator or a federal regulator that oversees crypto, or whether it's the SEC or a CFTC or somebody else, one thing that I've been hearing for, we're coming up on or maybe we just passed the 8-year anniversary from the SEC's Dow report. But one of the complaints, I think, from the industry is that the policymakers and regulators don't really have an understanding of how crypto markets actually function. Is there a particular aspect of that mismatch? Like, what are policymakers missing, if anything, in terms of actual everyday practical functionality about the crypto markets, if there's any comes to mind?
Yeah, I would say, there's a lot of education to do, no doubt. If you look at the members of Congress on the issues they deal with every day, they are wide, they are varied, they are complex. If you watch just a day of Hill hearings, you would be amazed at everything that is just being discussed. So it's perhaps not surprising that you have your rank and file member who might be generally familiar with something like Bitcoin, certainly something familiar with stable coins, as they voted on the Genius Act earlier this year, but maybe the intricacies of a particular market might be lost to them. But that's not new to any other industry, whether it's defense policy or intel policy or space policy or agricultural policy, which is overlapping in crypto policy these days. And I think what you are seeing is leaders emerge from both parties who have taken a really active role in digital assets, and it's much more come from a younger generation. As sort of you've had more retirements and you've had people move up to be different committee chairs or higher up in these committees, whether it's on banking, whether it's on agriculture, and they've really taken a stronger hand in guiding this, doing a lot on member education, a lot on staff education. And I think that has really caused a lot of the momentum that you're seeing, both behind the Genius Act, which is obviously passed, but also the market structure legislation that passed through the House, that would be the Clarity Act, on a wide bipartisan basis, because there's just been more time with these sort of issues. And again, you could say it's taken a long time, and in some ways it has, in a lot of ways, Kraken is one of the oldest companies in the crypto space. It was founded in 2011. So maybe perhaps not as old as other industries. So it really sort of depends on what kind of time scale you're on, that it's either been really short or really long.
Yeah. Yeah. At the SEC level, you were talking primarily about legislators, but the SEC level, it seems in the last 6 months with the crypto roundtables, there really is an effort by the agency to learn more to get up to speed. So I take that as a positive sign.
Yeah, absolutely. You've seen, I think, a lot of engagement from the regulators on this, whether it has been the OCC, the Federal Reserve, the SEC. There were just some discussions on nominations for the new CFTC chair. And obviously, the CFTC is going to see more than just over crypto markets, but if the sort of structure that's being talked about right now, they will also have significant oversight over digital asset markets. And I think having those questions asked of regulators as they are coming in builds familiarity and helps them build their staffs of people who just are familiar with the topic that 8 years ago might have gotten 2 pages worth of an opinion on, rather than something that's now a worldwide multi-trillion-dollar market.
Yeah. I love the fact that you brought up education because it is so important. And the interesting thing now, it's great to have these hearings and for the policymakers to be out there and really hearing from, the innovators and for them to connect. The problem is the innovation is snowballing and advancing so quickly. So I would be curious to hear your thoughts on how important should it be to have that dialogue going on more frequently with the regulators.
Yeah, I mean, at the end of the day, Congress cannot come back and rewrite the crypto legislation every year. Now, they might be able to do some tweaks every now or then, but anyone who is a seasoned person in Washington, D.C., knows that Congress deals with these issues usually once a decade, maybe once a generation, and then leaves it to regulators. If you look at how the internet is regulated today, those regulations were written in the mid 1990s, and they really have not had a large update. We were talking a little bit about what trading stocks might have looked like in 1996. It was on a dial-up modem. You were maybe getting advice on a forum. Now, obviously, you can trade it on your phone because everywhere you are, you can get all kinds of information. You can ask artificial intelligence what you think about a stock trade. Things that if you had told somebody in 1996, they might not have believed you. But most of the regulation around the internet has been left up to various regulatory agencies, which we don't have to get into. And so I think it sets a useful precedent for when Congress thinks about this, which is how do you have useful, strong frameworks that have consumer protection? Because at the end of the day, you are talking about consumers' wealth, consumers' assets, but is also flexible enough to continue to allow for the innovation that we've seen in the industry over a very, very short period of time. And I think that's what's going to come down for. And, again, staffing up these agencies, making sure that they have the resources necessary to really get the education needed to give strong guidance and right rulemaking after Congress finishes its job, whenever Congress has finished its job, will be really important going forward.
Again, harking back to NISMIA and the states' kind of efforts at innovation, I think some states, for example, had adopted crowdfunding or some form of crowdfunding even before the Federal Jobs Act. One of the differences back then was we had a Uniform Securities Act, and so most of the 50 states followed some version of it. And so, there was some uniformity, even though if you were doing an offering that of a security that wasn't preempted, you still had to qualify or to file notices in each of the states. I don't know. It seems to me that with crypto legislation, I don't think we have that kind of uniform code yet. And given what you know about the various state efforts, does there seem to be some uniformity among the states in trying to adopt their own crypto regulations, or are each of them kind of taking very different approaches to the regulation?
Yeah, I would say you saw a few early movers really try to set their path on what they wanted to be. Outside of that, one of our largest goals at Satoshi Action Fund was actually just getting and passing a uniform definition of digital assets. Most states did not have any definition of digital asset. If they had something, it was maybe virtual currency. And so we would have a lot of conversations with lawmakers. And we were talking a little bit about college football before we got on here. And one of my favorite sort of mental tricks would say I would go and talk about the biggest college football stadium in the state and say, that is filled up 6 times with people who own cryptocurrency in your state and you don't have a definition in your code for it. You should probably fix that because that's a lot of people. And they're like, oh wow, yeah. We're like really visualizing that. And I think, once you start with that, then you just start to states, I think, have sort of adopted a sort of bottom up, but I certainly don't want to reduce the role of groups like Satoshi Action Fund or some other state level groups who've been pushing to answer, I think, really basic questions, which are what are these things? What can you do with them? How are they treated? How are they taxed? And, maybe, you get a little further down the line and then you get more, sort of complex regimes for different businesses. But answering those basic questions, I think, was very much moving in a specific direction because lawmakers felt that they needed to act. And again, state lawmakers tend to be younger than federal lawmakers. They tend to be people who are in their 30s and 40s. They've had a successful career of some kind and are looking for something else. These are the people who are, I don't want to say grew up with digital assets, but are more likely to own digital assets than maybe some members of Congress who have, been in there for, 3 or 4 terms. And just that sort of familiarity of knowing how the technology works because they're used to dealing with it rather than just reading about it, I think has pushed a lot of this forward.
As we look forward to 2026, if you had to pick one policy initiative that you could change or that you would focus your energy on, which I guess you will be focusing your energy on it, what policy area would that be? What's your priority?
Yeah, it really is the market structure bill. So for those of you who are not familiar, I mean, the market structure bill is just sort of it's a catch-all term for who is going to be the regulator and where do these digital assets fall? Are they securities? Are they commodities? Are they something else? It obviously gets much, much more complicated by that for a variety of reasons. But for the average person, like what it's trying to do is really saying, okay, you've bought this thing. What is it? Is it a share of Apple stock, which entitles you to vote and entitles you to dividends and entitles you to that or something else? Or, is it much more of a commodity like gold or silver, which is, something that has use in of itself or might be used as a unit of account or international money or something like that. And at the end of the day, that sort of clarity for consumers also rules for centralized exchanges like Kraken, who has a long history of saying we are looking for clear regulation to make sure that people who come on our platform want to buy different digital assets for various reasons, they know the rules, we know exactly what we're supposed to do to be in compliance, is really important for us. We're very happy to offer staking, allowing people to earn rewards on digital assets. It was unclear for a period of time whether or not that was a security offering. Some states said yes, some states said no. So that sort of clarity to make sure that we can provide uniform services for people across the country is, I think, important not only for a company like Kraken or other centralized exchanges, certainly it's not limited to us, but also consumers, right? I live in Louisiana, if I'm driving over to Mississippi, can I buy the same kinds of assets? Am I allowed to deal with them in the same way? I think that's ultimately pro-consumer, pro-capital formation, pro-protection.
Great. Well, we wish you luck with that goal, and hopefully we will all have clarity on the regulatory boundaries in 2026. In the meantime, thank you so much for coming on, Eric. Really appreciate hearing your thoughts. Mark and Dara, thank you as always for co-hosting. For everyone else, if you want more information about ICANN, go to icanlaw.org, and we will see you on the next Capital Ideas. Thank you.